Hello traders, my name is Pete and this is Trading Kitchen. Welcome to this new video. If you have not seen my video on my intraday strategy that I posted, I shared here on my YouTube channel, I really suggest you go and see it before watching to this video, because today I will talk about the criteria by which I go every morning to choose the technical levels, the price zones from which I will try to open. I will consider to open my my trades. Okay. First of all, let me invite you to join my Discord group, subscribe my YouTube channel, press the thumbs up button and the bell to get updated on my all videos. Follow me on Instagram as well. And obviously on TradingView, because every Monday I make my Monday overview, in which I will share some good opportunities to trade during the week. Above all, I invite you to join my Discord group, in which I share every day my trading ideas for intraday and swing trading, educational content like this, group mentorship, and above all, you can see my trading journal with all the back tests like this one. So as you can see, every month I share all the trades for my strategies, and you can see all the back tests, all my stop losses, all my take profits. As you can see, I have a 50% of all the strategies, so everything in a total transparent way. And there is something that you cannot easily find on the internet for free. So I hope you appreciate this kind of content. So, what about my criteria? Let me do my premise. So, on my opinion, if you want to be profitable trader on the long term, you have to try to trade like big banks, like institutions, okay, and like all the big volumes out there. Basically, if you want to trade like them, there are two ways. The first is becoming one of them, so working for one of them. And if you do this, I suppose that you don't need my help, maybe I need yours. And the second is becoming one of them in terms of money. So if you have some billions to put in the market, you can do that. I suppose if you are here that no one of this any of these options is for you. So the solution is try to understand the logic that is that command, okay, the institutions. I mean, try to understand the logic by which institutions trade, okay, by which institution open they trade, okay. To understand that, the first thing that I suggest you is to go in and study everything that this man tell us in the past 100 years, more or less, okay. Richard Wyckoff. I already made a video about it, but maybe 1 year, 2 years ago, I don't know. Just take a look to my YouTube channel, you're going to find it. But to be honest, there are so many things about Wyckoff on the internet, and probably also so much better than mine. So if you want to really understand what he said and how he understood how market makers and market movers moved basically the market, let's study him, and this is a very good point from which you can understand, okay, the logic that is behind institutions. Okay, so this is the first thing. The second thing I want to tell you is find liquidity. Okay, and basically what's the liquidity? Liquidity is what really moves the market. Okay, it's something created by institutions every day. Okay, so basically they exploit us, the retail traders, to generate liquidity by which the market is moved. Okay, how to understand where liquidity is? So it is pretty much simple to understand. I know what I tell you now is, I know that is too easy. I mean, it's superficial. Okay, but it's not far from true. Liquidity is you can easily find on the chart the liquidity if you see when you see long tails. Okay, so for example, this could be liquidity. Okay, so and this is liquidity. Okay, because there are so many tails, so many wicks here. Okay, and this as well. This is liquidity. Okay, so as you can see, a rejection. You see a lot of long tails. Okay, and after the candle of the same tail, you will see a breakout of structure and a strong impulse. Okay, this is liquidity as well. Okay, you can easily identify liquidity using volume. Okay, so if you add a volume indicator, it could be so much easier. For example, here we have a huge amount of volume enter the market. And what does it mean? That here there is liquidity. And this is so much more impressive, so much more easy to understand if the liquidity that you just found is below, in this case, of supply zone, which is this one. Okay, so the first thing that you have to do on the technical point of view, which is something that I'm going to talk about you in this video, because there are basically two big scenarios: the technical, obviously, and the macro economic environment. Okay, I will tell you about something about macro probably in the next video. So today, just want to go deep on the technical aspects. Say, so liquidity here, supply zone. Okay, and I pretty much sure that here there is another supply zone, so above this liquidity, which is this one. Okay, this is liquidity as well. Okay, so basically when you see this long tails, means that something over there is happen. Okay, and why I tell you this? Because if here there is liquidity, it means that when price is going to breaks this level again, this level again, above here, probably something will happen. Okay, so when price is going to touch again and break this high, price will do like this. Okay, why? Because there is liquidity, so there are probably unmitigated orders. We don't know, obviously, if there will be a reaction that bring price to break all the structure and go down, obviously, but you can be pretty much sure that some reaction will happen. Okay. Third point, probably the most important one, and basically is the same of what I told you about liquidity. And the first point is manipulation. Institutions work every day by manipulation. Every day they manipulate the market against the retail traders, okay, using liquidity. If you do study Richard Wyckoff, you're going to better understand, okay, what manipulation is and how it develops on the market. Okay, so this is just a quick tip, and I invite you to go deep of all these concepts. Okay, so what I do every morning when I choose my my pairs from which I will open a position, probably I consider to open a position, and the reason by which I choose I will explain maybe in the next video, okay, but we will talk about the sentiment, we'll talk about the COT report, and so committed traders, and about news, obviously, okay, but as I choose my watch list, basically, okay, I will wait for the price to reach a specific level, a specific zone. Okay, so here, for example, we are, so let's go on S&P future. Okay, so the first thing to do, even if you trade an intraday, okay, with intraday strategy, but you have really to understand what is going on the big scenario. Okay, so a multi-timeframe analysis is crucial to really understand everything and to be comfortable enough not to go against the trend, the main trend. Okay, so for example, here what we have a clear downtrend. Okay, this little bit of retracement, this structure had been broken, and then strong movement down again. Okay, so the first thing to tell about this is that here for sure we have liquidity. So what does it mean? That when price will go here again, I'm pretty much sure that it's going to react. Okay, maybe not here, maybe just here, I don't know, obviously, but something, I'm pretty much sure that something is going to happen. Okay, so here we have liquidity. We are on 4-hour time frame. Okay, I do intraday scalp, so 4 hour is pretty much enough for me. Okay, then same thing on the lower time frame, but as you can see here we have a double bottom. Double bottom is the one of the most incredible pattern that you can trade, but not like the retail traders teach you. So not on the neckline, not here, but find the liquidity here. Okay, so below this double bottom there is liquidity. So you already know that when price will broke this low, will probably have a fake breakout, because this is a manipulation. Okay, and this is something that happens every day, because institutions want this. So it probably make this kind of movement. Okay, then all the supply and demand zone are very important, because I told you before, inside the supply and demand zone there is liquidity until all the liquidity have been taken. Okay, so for example here, all the liquidity they had, they are being all taken. Why I tell you this? Because here we have inefficiency or imbalance, and as you can see, price they already get everything and go down. Okay, then triple bottom here, you see 1, 2, 3 and 4 times that institutions try to break the zone, what does it mean? There is a lot of liquidity over there. Okay, so here there is liquidity. So what does it mean? It means that the institution is going to get the liquidity to go up. Okay, if they break out, take liquidity. This is what the retail traders call stop loss hunting. Basically, it's not a stop loss hunting. They don't care about getting you stop losses, but they know that here there are so many stop order, okay, for the breakout, because of the breakout traders. Okay, so they take the liquidity here. Okay, they open all the sell stops order. They get the stop loss of the buyers, okay, and then manipulate and go up. Okay, take a look also at the time. This kind of movement, it always it happens during the close to the US session opening or London opening. Okay, so 1 hour before and after 1 hour the opening of London and US. Okay, so this is another thing to keep in mind. So I highlight all the possible liquidity levels. Okay, I do it on the 4-hour time frame, and then I go down on the 50-minute time frame, which is my my main time frame for the intraday trading. I work with two main indicators. The first one is Asian session range. Why? Because I work on London and US opening. Okay, so I use the Asian session range that highlights all the movement. In this box is everything that happens during the Tokyo and the Sydney sessions. Okay, and you must know that usually, not always, but usually market movers, they use the Tokyo session, the Asian session, to generate liquidity, to create liquidity. Okay, so what does it mean when you have like today this range session in which nothing really happened? Okay, it means that this is liquidity. So the Asian session high and the Asian session low are very important levels that you have to consider. Okay. In fact, as you can see, price during the US opening today, they break out here and then go up. And as you can see, long tail after a strong movement, so probably here there is liquidity. They get the liquidity here during the US opening, okay, and then move up. And price seems that it's going to stop here on the Asian high. And now let's see what happened. Okay, another liquidity here. So I'm pretty much sure that for scalping, for example, this level could be very good, because I'm pretty much sure that there is liquidity over there because of this long tail. Okay, and I suppose that could be good for scalp this. Okay, so that's the reason why I use the Asian session range indicator. There are so many indicators that show the same thing, but with this indicator you can have so many things to choose. Also the US and London session, but I deselected everything, and I only leave the Asian session high and low because they are the levels that I care about. Okay. Another very important thing I already told you about is imbalance. Okay, what does imbalance means? It means basically a strong push of the market, like here, in which market leaves a gap. As you can see, there is nothing here on the left and there is nothing on the right. There is only this gap. Okay, so it means that here there are a lot of unmitigated orders. Okay, and the reason by which here we have one reaction and here we have the second reaction, it means that price is going to get all these orders. Okay, maybe not today, maybe not this year, but what does it mean? It means that price will probably go and take all the orders below also this liquidity level until they will take everything on this gap. Every order will be mitigated. So until here. Okay, that's the reason why I highlight all the inefficiency here. Okay, so basically I highlight all the breakout. When you see a long candle, I just highlight all the breakout. Let me do another example here, for example. Okay, these are all unmitigated orders. There are so many examples about inefficiency here. This will be very good as well. Why? Because we have a double bottom here. It means that there are liquidity. Okay, and inefficiency start there with this strong, very strong impulse volume here. So what does it mean? Here there is a lot of liquidity to grab. Okay, sorry for my drawings, guys. I know I'm not good. Okay, so basically I do highlight all this level, and I see that I know that I have to looking for some good opportunities only if price will touch these levels. Okay. The last thing I want to tell you, so this is liquidity levels as well, and so I do this on 50-minute time frame and the 4-hour time frame. Okay, so basically what I highlight, all liquidity levels strong, so strong candle with huge tails. Okay, second, Asian high and Asian low. Third, session volume profile. So the session volume profile is an incredible tool that we do have for free, I suppose, I don't remember, to be honest, on TradingView. And this is very, very good because I don't use it to for my entries, so it's not part of a trigger. By the way, let's take a look to my last video about triggers, and if you put together the trigger video with this one and the BS strategy, the video that I call the prop firm killer, you're going to be very, a very better trader than today. Okay. So what about the session volume profile? Let me remove, we don't care about this now. So basically it shows us the POC, so the point of control, so where the most part of volumes are concentrated inside during the session, the previous session and this session as well, and the volume area high, this, and volume area low, this. Okay, So this is very important to really understand the trend. So for example here, as you can see, these are all the session. Okay, so this is one day, this is another day, and this is the third day. Okay, so look the POC, for example, or the volume area as well. They do like this. Okay, in which in the first day we have here the POC, then we have here, and then we have here. Maybe inside here there is a liquidity level on the 4-hour time frame, or look here, perfect. This is liquidity level. Okay. Why? Because there is nothing here, and this here there is an inefficiency. Okay, so I know that from this level something is going to happen. Okay, maybe not a reversal, but I know the price we're going to react in some way. Okay, so basically this is level, liquidity level, price, grab the liquidity here and then push bullish. Okay, but as you can see, POC here on the first day, POC here on the third day, and the second day, and POC at the top, so above everything, also above here on the third day. What does it mean? It means that trend is completely changed. Okay, on the 50-minute time frame. So then you have to wait. You have to take a look to a 4-hour time frame. Is everything is line, and in this case it's not, because as you can see that time frame here is a downtrend, but on the long term. But as you can see, we have this channel. Okay, and so for the intraday we are line up with the main target. Okay, from until where? Until here. Why until here? For the same thing I told you before. Here there is a supply zone, and here we have a lot of liquidity. Okay, so price will going up until here. Then who will see? Who knows? Obviously. Anyway, let's go back on the 50-minute time frame. And what what session volume profile tells us? Basically the trend. So if we know that on the previous 4 days we have this kind of setup, okay, it means that the next day will be bullish. Okay, what does this mean? It means that I only have to look for a manipulation that have a candlestick pattern, a liquidity pattern on a bullish way. I don't know if it's clear, but let me do an example right today. Okay, so I did not take this trade, to be honest, because I quit trading for until September, until the end of August. But I will not probably open trade until price reach this level. Okay, but I will not open any short here. Okay, even if this could be good, because price could take this, do this thing. Okay, but I don't care. I don't need a lot of setups. I'm pretty much sure that I'm going to find a setup for my trading. So I'm not afraid to stay away from the market. But just wait for the price to reach the zone, because I know that the main trend is bullish. And how I know that? Because the session volume profile tells me that. Okay, let me remove everything, and let me give you the last example. So remove drawings, and so for example, okay, look here. So let's go back. So this is the same thing. Okay, so we have a strong bearish trend, where if you see all the volume area and the POC are decreasing. Okay, then we have a strong movement and the POC is now bullish because basically broke this structure and this structure as well. So what does it mean? That for this day, for the next day, I will only consider a bullish trend, a bullish trade, sorry. Okay, so where are the liquidity levels and all the possibility to trade bullish? We have this inefficiency, and we have this liquidity level, we have this liquidity level. So there are so many liquidity here, and I'm pretty much sure the price, if price will going to take the liquidity here, because it's not so obvious, probably price will do this without getting all the liquidity, grabbing all the liquidity here. It's something that happens often, okay? And we do have liquidity here. This is very good because here there is a demand zone, okay, with this inefficiency. Okay, so I only look for trades from all this level. Obviously, I didn't care this time about multi-timeframe analysis on the higher time frame, but as you can see, you have to be very careful because this is a liquidity, and obviously a liquidity on the 4-hour time frame is so much more powerful than the 15-minute time frame liquidity, obviously, okay? And here we do have a supply zone. So yes, I have to keep in mind that here we have inside the liquidity level, so that can bring me my trade, can bring my trade against me, but I know that we are bullish. Okay, so let's see what happens. And obviously it's in session. It's just a little bit slow, my Mac today, sorry guys. Okay, price already get the zone, already take the, already get into the zone, and as you can see, reacts very good, broke all the structure, all the liquidity here, and it doesn't stop now probably. So get the liquidity here, why not just below this level? I don't know, to be honest, but maybe let's wait, and is going to grab here. But as you can see, price go up until this zone, okay? We didn't have so much more opportunities, but as you can see now, price grab the liquidity here, okay? Grab the liquidity here and move up, okay? As you can see, I already highlighted all the liquidity, okay? So basically this is what I do every morning, okay? I choose all the currency pair on Forex to trade using the sentiment and the macroeconomic environment and the news, obviously, but on the technical point of view, I do every morning this thing, okay? Well, that's pretty much enough. I hope you like this video. So I really appreciate if you subscribe to the channel, use the comment section below, and let me know what you think about. And yeah, that's pretty much it. Thank you very much, guys. See you in the next video.